Hello, traders, and welcome to the fourth lesson of this trading webinar series. And thank you so much for the punctuality of everyone who are here right away at the start. So let's just wait for other participants before starting the raffle again. So by the way, we will start the raffle again before before moving on with our webinar. And we have 15 participants from our last webinar. So hello, Sam Daniel. Good evening to you as well. Hello, God's time. Hello, Mark Patrick Canlas Sanggalang. So nice to see you here at the start. Hello as well to you, Rambo and Selvarani Rani. Okay, so before we begin, I would like to invite you once again to join us on our Telegram channel. You may look at the link at the description box below this on this video, and you may see the list of the winners from our last webinar. We have 15 right answers. Hello, Sam Daniel. The $100 will be credited on your live trading account. Our team will reach out to you. Okay. Welcome back, Dayo Shioye. Hello to you as well. Hello, Edwin Quejada. Good evening, Sir Benancio Junior Arenas. Welcome back. Hello, Raver Rom Montoya. So we are glad that you are with us here today. So if you are brand new to trading, you may want to look on our past webinars because what we are going to talk about today is somehow a bit advanced topics, especially the multi-time frame analysis. So by the way, what we are going to talk about today is about the market structure. So if you remember last time, I told you that I will teach you on how to look for the important levels on the chart. So that's the topic that we are going to discuss today, as well as the pattern, the 1 to 3 pattern, the pattern on how to look for a trend, and of course the multi-time frame analysis. So we will combine all of those things together on what we learned from our previous webinar last Wednesday. Hello, Julie Igloso. Welcome back. Good evening to you as well. Hello, Techno R. Adi. So for each webinar, one person will have a chance to win the $100. So after this webinar, I will ask you again a question related to our topic. Then on Wednesday next week, we will again draw the numbers for those who answered the right answer. Okay? So let's wait for a few minutes before starting. So let's wait for 2 minutes more. So the list for the winners can be seen at the description box below. Hello, JP Ramos. Welcome back. By the way, good morning and good afternoon, good evening to everyone, wherever you are watching today. So, hello, just chilling. Good morning from Mexico. All right, so let's now start the raffle. So, we have 15 right answers. So, here, as you can see, let's now start the draw. So, again, you may look for your number at the description box below. Okay, so 5, 4, 3, 2, 1. So, there you go. Our winner is number 7. So, congratulations. And number 7 is Aldron Edradan. So, congratulations, Aldron. You are the winner for our today's raffle. So, you may want to keep in touch with us. Our team will reach out to you to give you the $100 on your trading account. So, once again, congratulations. So, good evening to you as well, Aishwara. Welcome back. All right, so let's now start with our today's topic. So our topic for today will be structural analysis. So just like what I'm saying last Wednesday, what I am going to discuss today, or what we are going to learn for today's session, is the important levels on the chart. I will teach you on how to look for those important levels on, and how to put trades on those important zones, especially the support and resistance zone. So just like we learned last Wednesday, we should look for trend, right? And later I will teach you on my simplest way on how I am looking for a trend. Okay, so to start, so let's start all of our sorry. Okay, so let's start our webinar today for by discussing the market structure. So market structure is a behavior, condition, and current flow of the market. So it highlights support, resistance levels, swing highs, and swing lows. So this is very important. Every time that you are trading, just look for swing highs and swing lows. And if you are able to locate the important swing highs and lows like this, then you can start with your trading. The most important levels on the chart are located on its highs and lows and on its previous highs and lows. So understanding the market structure is important for traders to make informed trading decisions and develop successful trading strategies. Okay? So if you know how to look for the important levels on the chart, so it will be clearer to you. It will be more easier for you to look for a trade. Because if you don't know how to look for those levels, for those important levels on the chart, it will be complicated and it will be more difficult for you to look for for a trade, and it will cost you a lot. So because back when I started, I don't know what to do, and I am just looking at the chart blindly, and I am taking trades blindly without knowing what the trend is and without knowing where the important levels are on the chart. So because in trading, always remember that we should follow the trend. If the price is going up, so we should consider taking a long trade or a buying trade. We should only look for a buying opportunity. And if the market is going down, then we should only be looking for a selling opportunity. Okay? Because if you buy in a downtrending market, let's say you bought here without knowing that it is on a downtrend, you might suffer this loss. As well as if you took a sell trade on an uptrend. So let's say you took a sell trade here. So true enough, the price goes down, but the long-term trend is still up. So we might suffer this loss, this next impulsive move right here. Because whenever the price is trending, there's a high chance or a high probability for the price to continue with the momentum or to make a follow up with the momentum. So that's why it is very dangerous for us to trade against the trend. It is like surfing against the wave of the water. Okay, so for example, you are a surfer. Of course, you don't want to go against the water, like right the flow of the water. What we can do is to go with it for us to have a smoother surfing experience. So it's trading works just like that. Okay, and by the way, market structure has three types. So let's discuss that right now. And those types were trending market. So just like what I am saying, we have uptrend and downtrend. We also have reversal markets. So this is where the price is making a reversal from up. So let's say the market is going up, and then once the price started to go down like this, so move right here, this move right here is what we call a reversal. So of course we can't know, or we don't know when will the price stop at the top. So it is very dangerous to look for a trade at the top, because we don't know what the price will do. We are just reacting on what the price is doing. Okay, we are not predicting, and we are just reacting on what the price is about to do next. Okay, so keep in mind, or take note for that, for those things, because a lot of traders are trying to sell at the top and buy at the bottom, but it is very dangerous thing to do. So later I will teach you on how to trade the reversal market as well, together with the trending market. Okay, and of course, the last thing is we have consolidation markets. So consolidation means that the price is going nowhere. So while we have an uptrend and downtrend, we also have a sideways, or what we can call a consolidation. So every time that the price is acting like this, it is just going nowhere. We can put a resistance and support at the same time. So whenever the price is doing this move, let's just avoid trading this market, because we could lose with this strategy. So I'm not saying that it is not a good strategy. Our other traders are making profit from consolidation as well. But for us beginners, let's just focus on the trending markets. Okay, so let me take a look at the live chart. So let's take a look at the euro dollar on the daily time frame. So here, as we can see, just like what we are discussing, we have price going down, as we can see here. So every time that the market is going down, so that's what we call a downtrend. And every time that the market is doing the opposite, so let's try to look at a good example. So here, as we can see, the price is going up in this section. So this is what we call an uptrend. All right. So basically, that's how market structure is, we have, let me just draw it. We have an uptrend, then we have a downtrend, then finally we have a consolidation. So we can call it consolidation, or we can also call it sideways move or sideways. Okay? So basically this is what a market structure, or this is the nature of market structure. It is just analyzing the important levels on the chart. So later I will teach you that on how to look for those important levels. But the main idea is to look for a trend, whether it is going up or down, or whether it is just going nowhere, or if it's making sideways. Okay, so that's the three main structure that we can see on a day-to-day basis. Even if we change our chart, so we are now on the euro dollar now. So let's try it to change it. Let's say dollar yen. So here, as we can see, for the dollar yen, we have another uptrend right here. Okay, and we also have a consolidation right here. Right, so this is a long consolidation. And of course, we also have a downtrend right here. All right, so those were the three main types of market structure. All right, so again, let's just go back. It is the behavior, the condition of current flow of the market, and it highlights support and resistance levels, swing highs, swing highs, and swing lows. So later, I will teach you on what are the swing highs and lows and how to trade with these structure levels. All right. So moving on for our point two, or for our lesson two for today, the structural levels on the chart is an important part of technical analysis for traders, especially uh, if you are, let's say, a day trader like me. You may want to look for the important levels on a lower time frame. So later we will discuss the multi time frame analysis and structural levels, or of areas of support and resistance that are derived from the market structure rather than from indicators or arbitrary levels. Okay, so a lot of traders are using indicators, especially the moving average. So let me show it to you on the chart. So here, as we can see, we have a green line right here, and this is what we call the moving average. So a lot of traders are using this indicator for them to filter out the trend. So every time that the market, or that the price is above the moving average, every time that the price is above this line. So by the way, we can change the color of this one. Let's try to make it white for us to see it clearly. So there. As we can see, every time that the price is above the white line or the moving average, so that means we are on an uptrend. Okay? And every time that the market is below, so let's try to look at a good example. So here, every time that the market is below the moving average or the white line right here, so this is what we call a downtrend. So other traders are using this indicator for them to filter out what is happening. But for other traders, and based on my experience, it is good as well to learn how to look for a trend without any indicator on the chart. Just look for price action, and then you will be able to know if the market is going up or down. So to do that, what we can do is to simply zoom out the chart. Okay, so let's try to use this method and tell me if the price is going up or down. So let's try to use this information that we have right here. So can you tell me if the price is going up or down? So just comment up if you think that if it is on an uptrend, and comment down if you think that it is on a downtrend. Good evening to you as well, Tony Kasukog. So there, Edwin Quijada said that it is uptrend, as well as Kevin J. So how about the others? Do you think it is up or down? So if you said, or if you answered up, then you are right. So as we can see, simply by zooming out the chart, we can clearly see that the price is going up. All right, so that's how we can use the price action alone without any indicator. So for if you are being confused by it, what you can do is to combine the moving average and the zoom out method, or the zoom out strategy. Okay, so every time that you zoom out, and if you saw that the market is going up, you can use the moving average, and as we can see, true enough, the price is moving above the line or the moving average. All right. So how about let's take a look. How about this session, or this section right here? Do you think it is up or down? This one with the box, do you think it is up or down? Do you think it's up, down, or sideways? So there, a lot of you are saying that it is on a down, sideways, and you are right. So as you can see, the price just keeps on bouncing from this level and from this level that we have right here. So every time that the price seems like it is just moving on a sideways move. So again, we can call it sideways or consolidation. And here, obviously, we can see that the price is going down with this section, right? We can clearly see that the price is going down. So now that we know that we have uptrend, downtrend, and sideways, the question now is how to look for the important levels on the chart, right? So let me go back to my drawing earlier. So here, as we can see, the the market structure, or the the price whenever it is trending. So in this case, we have an uptrend example. Okay, so whenever that the price is going up, we can see, or we are seeing, we can clearly see that the price is not going up on just a straight line, right? We can see that we have a move up, and then a move down, and then it will go up again, and then it will go down again, and then it will go up again. This is just the nature of the market, and this is how a market structure works. All right, and this is very important because when you learned how to read a market structure like this, the highs and lows, again, we can see here that highs and lows, swing highs and lows are very important. Okay, and once you learned how to read those market structure, the highs and lows, you will be able to trade even without a moving average, and you will be able to locate where are the most important levels on the chart. Okay, so let's now talk about this. So as we can see, this is the start of this uptrend move. Okay, and then the price went up, and then it went down again before making another move to the upside. So this move right here is what we call an impulsive move. All right, so this first leg is what we call an impulsive leg or an impulsive move. All right, so this is our first impulsive move. Okay, and once the price started to go down right here, this is what we call a pullback or a correction. All right, so this is our first impulsive move. So assuming that we are just right here now. So this is our first impulsive move. Then the price made a sideways, a pullback, and this is what we call a correction move. We can also call it a pullback. And then once the price breaks this level, we can see that the price breaks this level, right? So this move right here is what we call our next impulsive move. All right, so I hope you are able to follow the teaching so far. So this is again, this is our first impulsive move. So if you are being confused, so you I will give you the chance to ask later and I will address your questions. So again, this is the first impulsive move that we have. Okay. And then this is the correction move. This is our first or our second impulsive move. And this right here, this is our second impulsive move. This is our second correction. And then this right here is our third impulsive move. And if the price made another pullback, that's our next correction move. So to make this simpler, we can call this a 1, 2, 3 pattern. Okay, so let me show you what I mean. So if the price is making a move like this is what we can call a 1, 2, 3 pattern. Okay, so remember that. So this right here, or the first impulsive move that we have, is our 1. Okay, so this will be our 1 move. And then the correction move that we have is our 2 move. Okay, so this impulsive move is our 1. The first leg is our 1. And then the first correction move or the first pullback is our 2. Okay, and then finally the third move or our next impulsive move is what we call 3. All right, so that is why we called it 1, 2, 3 pattern. All right, we can also call it ABC. So other traders are calling it ABC as well. All right. So in this example, let's stick to 1, 2, 3. Let's just to stick to 1, 2, 3, and we should also be aware that this structure at the top is what we call high. So of course it is at the top. That's why it's called high. Okay, and the structure that we have at the bottom is what we call the low. All right. So remember, it is highlighted here at the on our slide. And of course, if the market breaks this previous high, okay, so this first impulsive move that we have right here, or this 1 move, as we can see, the price was able to break it. If the price is just right here, then the price went above this previous high. This is what we call a breakout. All right. If the price breaks it, Then we have another impulsive move right here, or this is our 3 move. Remember, this is our 1, this is our 2, and this is our 3. Okay? So whenever the price created the third move or the 3 move, we can see that this high is being higher than this previous high. And once the price created its next correction or its next pullback or its next pullback, we can see that this previous low or this next low is higher than this previous low. All right. So combining all of those things together, this is our impulsive move, which is our 1. And then this is our first correction move, which is our 2. And then once the price breaks this previous level, this previous 1, this will be our new high, and this will be our 3. All right. So now that we can see that it is higher, this new high right here, we can see that it is higher than our previous high. Okay, again, this is our high, and this is our lows. All right, so now that we can see that this one is higher, this move right here, or this 3 move, is higher than our previous high, then we can call it a higher high. All right, and if that's the case, what do you think this low will be called? So we can see that this low is higher than our previous low. So if this high was called higher high, what do you think this new low will be called? Okay, so I will give you again the chance to answer on our live chat. What do you think this new low, we formed a new low right here. What do you think is the, or what do you think we can call it a higher low? So what do you think? There, Dayo Shoyoya said it's higher low, as well as Tony Kasukog. How about the others? But they're higher low, lower low. Okay, so you are right. So this, because this low right here is higher than our previous low. So this is what we call a higher low. All right. So now that the pattern is complete, we have our first impulsive move, which is our 1 move, and then we have our correction move, which is the 2. Then we have the next impulsive move, which is the 3. Once we saw a pattern like this on the chart, so this is again what we call a 1, 2, 3 pattern. And by doing this, we now know where is the next important levels on the chart. So now I will teach you how to trade with this level. So now that we know that we have a 1, 2, 3 pattern, the question is how to trade on, or how to locate the most important levels on the chart. Okay? So before we do that, let's take a look at the live market example. So here we can see that 1, 2, 3 does exist on this chart pattern. So here we have 1, 2, 3, and then we have another 1, 2, 3 right here. So there, as we can see, this pattern exists every time. Whether we are on a daily time frame, a 4-hour time frame, or even 1 minute time frame, we can see that this pattern appears. And if we take a look at the downtrend, so let's take a look at the downtrend example. As we can see, this market structure at the top, again, is what we call the high. And the market structure at the bottom is what we call the low. Okay? And just like on the uptrend, we have a 1, 2, 3. The same is true for the downtrend. We have our first impulsive move, and then this is our pullback. It's just the inverse of the uptrend. This is the first correction move, and then we have this next impulsive move, and this is the completion of our 1, 2, 3 pattern. Okay? So now that we know that we have a high and a low right here, then we can see that the next high, this next high is lower than our previous high. So what do you think this high will be called? And we also have a low right here, which is lower. This low is lower than our previous low. So what do you think this low will be called right now? Hello, God's time. There's a proper way of saying if we are on an M and W pattern. But nice observation right there. So later, I will show you what an M and W pattern looks like and the proper naming convention for that. Okay. So as you said, this new high right here is what we can call a lower high because it is lower. This one is lower than our previous high. So you are right. And this low is lower than our previous low. So this is what we call a lower low. Okay? So if you answered lower high and lower low, then you are correct. So okay, so to move on, now we have a consolidation. And this right here is just simply, again, we have a high right here and we have a low at the bottom. So this is simply what we can call an equal high and an equal low. Okay, so we can draw a support at the bottom and we can draw resistance at the top. All right. So now that we know what is 1, 2, 3 pattern, what is impulsive move, what is correction move, now that we understand the nature of the market structure, it is uptrend, it has downtrend, it has sideways. The next question is where to locate those important levels, right? So before learning where to locate the importance levels, we must be familiar with the recency and frequency. All right, so recency means that it is the most recent lower high or higher low at the market structure. And then frequency means we need to make sure that that level on the chart must be tested multiple times before, at least 2 to 3 touches for us to be able to consider it an important level on the chart. Okay, so back at this 1, 2, 3 pattern, where do you think our most recent structure will be found? Or where do you think our most recent structure will be? Do you think this is our most recent level? What do you think? Yes or no? Do you think, again, we have 1, 2, 3, then the price was able to break this previous high, again, our one move. So this is our one move, right? Then the price breaks it with our three move, with our third leg. So do you think this is the most recent in Tagalog, pinakabago? Do you think this is the most recent level on the chart? What do you think? So again, we are looking for support, okay? Because we are on an uptrend. So always remember that if we are on an uptrend, So let me just write this. Always look for a support zone. Okay. And if we are on a downtrend, look for a resistance zone. Okay. So take note for this one. So do you think this market structure, this previous one, so again, we have one. Okay. So this will be our one, and we have two. This will be our two, and we have three. So because we are on an uptrend, we should look for a support zone. Okay. So do you think this previous one will be our support zone? So a lot of you said yes, and a lot of you also said no. So if you answered yes, then you are right. So this is our most recent structure level that the price has broken. Okay? So now that we know that this previous one right here is our most recent level, we should look if the price before has tested it multiple times. So if we stretch our line or our support, we should take a look if the market has tested it multiple times like this. So if we have one and two, three touches, then that means it is um, being touched more frequent. Okay. So let's take a look at the live example. We can see the if we can have a 1, 2, 3 pattern. So let's take a look at the uptrend example because we are studying the uptrend move. So let me just take a look at a good example. So here, this is a good example that we have right here. As we can see, if we zoom out our chart again, the first thing that you need to do is to zoom out your chart if you want to know if the price is going up or down. Always start by zooming out your chart to see what the market is doing. Okay? Because if you are too close with your chart like this, you may be confused. But if you zoom it out like this, we can clearly see that the price is clearly doing a 1, 2, 3 move like that. Okay. So now that we know what we should look, of course, we should look for a 1, 2, 3 pattern. And for you to be able to locate your 1, 2, 3 patterns, your levels, what I can suggest or recommend is to use a line like this for you to be able to locate those levels beautifully, or for you to be able to locate it with more accuracy. Okay. So now that we know, by the way, do you agree that this is our 1, 2, 3 pattern? Hello, Dayo Shioye. So a good question right there. So on our next upcoming webinars, we will talk about the Elliott wave theory. Okay. But for now, let's just focus on the basics. So again, do you agree that this is our 1, 2, 3 pattern? So I'm glad that you said yes because it is indeed our latest structure, right? So as you can see, by the way, if you want to locate a more accurate 1, 2, 3 level, don't go too far like this because a lot of traders are going too far like this one. All you need to do is to look on where the price is currently sitting right now. And then once you saw that the price is right here, all you have to do is to look at the left, not too far, just like this. And then once you saw a pattern like this, we can clearly see that this is our one move, then we have a two, and then this is our three. Then once you identified your 1, 2, 3 pattern, now you know that this previous level right here is our recent. Again, it is our recent. So remember the recency and frequency. So this is the most recent structure level on the chart. Okay. So now that we know that this is the recent level, should we look for a buying opportunity or should we look for a selling opportunity inside this zone? So if you said that it is a support, and if you said that we should look on a buying opportunity, then you are right. So now that we know that this is the most recent level, again, to recap, we need to locate our 1, 2, 3 first, and then we should look at the most recent level, which is our previous one. Okay. So now that we know that, we should look if this was touched multiple times before. And true enough, we can see that it was tested 1, 2, and 3 times. So this is indeed our recent structure level. Okay? And this has been tested not just twice, but 3 times before. And because of that, we should be prepared if the price created another pullback, if the price created another correction, then we should be prepared by looking to buy inside the support zone. And if we move forward the price, we can see that it was tested. So here we can see that the price tested our zone, our support zone. So again, we are on an uptrend. That's why we are looking for a support. Okay. So if we are on a downtrend, then it is the opposite. So we have a 1, 2, 3 to the downside. Our recent level is right here. So we should look for a pullback inside this resistance zone for a possible continuation to the downside. So in this case, for the uptrend, we can see that the price retested our support zone. So let's see if the price could make another impulsive move like this. And if the price created another move like this, then this will be our new 1, 2, 3 pattern, and this structure level right here will be our next recent structure level, and this will be our next most important structure on the chart. Okay, so let's see if the price can do a move like this. So there's we can see it is now starting to go up. And true enough, we can see that the price was able to go higher and it created a move like this. Okay, so that's the first thing or the first trade that we can do after looking for a 1, 2, 3 pattern. So the next question is, if let's say I don't want to buy at the support. Let's say I don't want to buy the pullback because it is going down, and I don't want to buy if the price is going down. I want to buy if the price is going up to be able to follow the momentum. So is it possible? So yeah, it is possible, and we can do it by trading the breakout. So let me just go on a blank chart again. So here again if we have a 1, 2, 3 pattern. So now that we know that we can locate our most recent level, which is right here. So this is our support zone, and we know that we have a tendency for the price to go back down here. But if you don't want buying while the price is going down like this, okay, the price is going down and it is pulling back into our support zone. But if we don't want to buy whenever the price is going down, then our next option for us to look for a buying opportunity is to look for a breakout into this previous level right here. Because as we can see, this 1, 2, 3 pattern, this 1, 2, 3 pattern has also a breakout into it. This previous one has been broken by this 3 move, right? So if we go along with the momentum, we have or we know the probability that the price will do a breakout again from this previous high or from this new one that we have. Okay, so this is our 1, 2, 3 move, and this would be our next 1, 2, 3 move. All right. So for us to be able to buy, if we don't want buying on this support while the price is doing a downward move, or while the price is going down, if we don't want buying on those scenarios, what we can do is to look for a breakout instead of a pullback. All right, so take note of this. Whenever the price is creating a continuation to the upside, and once the price breaks this level, so let's say a price or a candle close above this resistance or this previous high. If this candle close, then this is what we call a breakout. All right, and this is also a good buying opportunity for us to be able to ride the momentum to the upside, because we know that there's a high chance that the price could go up even higher after breaking this previous high or this previous level. So to see that on a live chart, so let's go back to this 1, 2, 3 pattern. Okay, so we can see that again, going back, this is 1, 2, 3 pattern. Okay, and we have our support zone right here, and we can see that the price pulled back into this level. So now that we know that the price has a tendency to move higher after reaching the support, we should look into this previous high, and let's see if the price could break this level. And once the price breaks it, once a candle close above it, then this means that the price was able to break this previous structure, and we can buy together with the momentum, and we can expect for the price to go higher because of that breakout. All right, so let's see if the price can do it. So there, the price is now going up. So once the price close above this level, or once a candle close above this structure like this, then that's a good buying opportunity for us. All right. So there, as we can see, this green candle right here was able to break this structure or this previous high, right? So we have a breakout. This green candle right here is what we can call a breakout candle. All right. So this green candle here is a good breakout candle, and we can consider taking a long trade with this breakout. All right. And let's say we took a buy trade. So let's see if we can win. So let's just say the stop loss is right here, while the take profit is on a 1:1 risk to reward ratio. So if you bought here, so let's see if the price could continue to go higher. So there, as we can see, the price goes up after breaking this level. So this is what we can also call a momentum trading. Okay. So again, if you don't want buying on a pullback, so this again, this is what we call a pullback, right? This move right here, this is what we call a pullback. If you don't want buying on the pullback, what you can do instead is to look for a breakout. And once the price breaks this previous high, then we can buy with that breakout, and we can expect for the price to go even higher because the momentum is on the upside. All right. So do you have some question before we move on to our next point, which is the multi-time frame analysis? So here, as we can see, our next lesson is multi-time frame analysis. So this is a bit this is a bit advanced. So before moving on with that lesson, let me know if you have question. Hello, Philip Samuel. So good question right there. So we can use the previous data. So if you want, um, for how long will it take for the market to move? what we can do is to, of course, look for our previous one. So here we can see this is our 1, 2, 3. Okay. Once the price reach our previous one, then we can expect for the price to go higher because the price may bounce back off of this zone. Okay. And if you want to know if the price could go up like this, what we can do is to calculate the pips of this previous impulsive move. So we can see that it has 716.9 pips. So we can put it in this support zone and we can expect for the price to move another 716.9 pips. But unfortunately, this next impulsive move right here didn't do it. Okay, but you got the point. I hope you got the point. Okay. So hello, Venancio Junior Arenas. So to answer your question, the best time frame for you is depending on what type of trader are you. So if you are a swing trader, then you should look at the daily time frame. If you are a day trader, you should look at the 4 hour or even the 1 hour or 30-minute time frame. Okay, so day trader means you are buying and selling at the same the same day. If you are a swing trader, if you if you bought a pair today, then you likely be sold that sell that position, let's say after 3 days or after 5 days. So that's what a swing trader is. And if you want to trade like that, then you should look at the daily time frame. But if you want buying and selling at the same day, then you should look at the 1 hour time frame. Okay? Okay, so let's now move on our next topic. So our next topic will be multi-time frame analysis. And this is a good combination if especially if you are trading with the trend. So we can use multi-time frame because it is a technique used by most traders like us to analyze a currency pair across different time frames. So like here, for example, we are on the 4 hour time frame. We can see that we have 1, 2, 3 pattern right here. Okay. And inside this one move, inside this one, we can see that if we go down on the 15-minute, it is moving like this. We have another 1, 2, 3 pattern inside the one. Okay? Because if we divide the 4 hour time frame into the 15-minute time frame, it will print a lot of candlesticks. Okay? Because just think of it like if we are on a 1 hour time frame, so of course a one candle will open and close after 1 hour. So let's say the this candle open at 4, it will close at 5. And then if we go down to 5 minute time frame, if we go down to 5 minutes, then this 1 hour will be divided into 12 because 60 divided by 5 is 12, right? So imagine if we are on a 5 minute time frame, then we will see 12 different candlesticks. Okay? So for example, let's take a look at the live chart. So for example, we are on a 1 hour time frame. And here this big impulsive move right here, or this one move, this has a lot of candlestick inside the 5 minute. We can see a lot of 1, 2, 3 patterns inside this one move. And if we go down into it, so let's see. So this is where we are right now. So here, as we can see, just like what we are saying earlier, we can clearly see that this single move at the 1 hour time frame. So this is the single line or the single move or the one move for the 1 hour time frame. But if we go down or if we take a look at the 5 minutes, we can see that it has a lot of one, two, three patterns inside this time frame, which is the 5 minutes. Okay? This is happening because, again,